The first few days of 2019 trade has been met with a very nice recovery in U.S. bond yields. Today, the 10-year yields rose to their highest level in 2019. Of course, it's not a very long period of time, but it certainly is a refreshing change from what we had towards the end of the year, where bond yields just fell day after day. Today, the move higher in bond yields were driven by two things. The first was the Veterans Inspected Jobless Claims report. And then secondly, we had comments from Fed Chair Powell. Now, even though Fed Chair Powell suggested that they need to remain patient on raising interest rates, and that basically implies they have no plans to tighten monetary policy in the near term, what the market really latched onto was this comment about the balance sheets and how they need to continue to shrink the balance sheet given the performance of the economy, and that basically is positive for bond yields and kind of accelerated the move higher that we've been seeing since the beginning of the year. What's also contributing to the recovery in yields is the fact that the market, which had gone from pricing in a rate cut in 2019, believe it or not, to a rate hike now. So we did have a shift in expectations, and that has also kind of brought investors back into to yield plays. So that's something that we're watching very closely. As we look ahead, there's not much going on in terms of U.S. data because of the U.S. government shutdown. We have a very quiet calendar, but next week we have retail sales as well as the inflation report. And unfortunately, inflation and prices in general have been relatively subdued, so I don't think that's going to help yields all that much. But holiday spending seems to be fairly robust. I know we did have some disappointing earnings or guidance from some retailers, but according to Johnson Redbook, towards the end of the year, we did have a nice recovery in spending. So we could get some yield positive data next week, and if that's the case, we could continue to have a recovery in 10-year rates.